Understanding tax deductions is one of the simplest and most effective ways for everyday Australians to reduce their taxable income and keep more of what they earn. Every year, millions of Aussies miss out on legitimate deductions simply because they're unaware of what they can claim or how the rules work. Whether you're an employee, a freelancer, an investor, or someone working from home, knowing your eligible deductions can make a significant difference in tax time. By keeping good records and understanding the ATO's guidelines, you can maximize your return without stepping outside the rules. Tax deductions help reduce the amount of income you pay tax on. By knowing what you're allowed to claim, from work expenses to donations and work from home costs, you can legally boost your refund and avoid missing out on money you're entitled to. Top 10 tax deductions every Aussie should know 2025. Detailed, lengthy, and easy to understand. Number 1. Working from home WFH expenses. Many Australians work remotely for at least part of the week, and the ATO allows deductions for certain home-based work costs. You can generally claim under either A. Fixed rate method, 70 cents per hour. This covers electricity and gas for heating, cooling, and lighting, phone and internet usage, stationery and computer consumables, decline in value of certain home office items. You must maintain a record of the exact hours worked from home. A diary, roster, or digital time tracker is acceptable. Actual cost method. You calculate the exact work-related percentage of each cost. Claimable items may include internet bills, mobile phone use, electricity, actual power consumed while working, office furniture depreciation, computer or laptop depreciation. Key rule: you must be able to show how you calculated the work-related portion. Work-related car and travel expenses. If you use your own car for work purposes, many expenses may be claimable. This does not include travel from home to your workplace. Claimable purposes: driving between job sites, attending work meetings or training away from your usual workplace, picking up work supplies or equipment. Methods to claim: cents per kilometer method, simpler, based on a fixed rate per kilometer. Logbook method, more detailed. You claim a work-related percentage of all car expenses. Expenses may include petrol, servicing, insurance, registration, tires, and depreciation. Number 3. Tools, equipment, electronics, and work supplies. If you buy tools or equipment required for your job, you can claim. You can claim laptops, tablets, phones used for work, power tools, work-specific machinery, professional reference books, safety equipment, stationery, diaries, planners. If the item costs less than the ATO threshold, you may claim it instantly. If it costs more, you claim depreciation over several years. Number 4. Work-related clothing, uniforms, and laundry. You can only claim. Deductible clothing includes compulsory work uniforms with employer logo, occupation-specific clothing, chef's whites, nurses' uniforms, etc. Protective clothing such as steel caps, safety glasses, high-vis gear, laundry costs for such uniforms. Not deductible: generic business wear, everyday clothing, even if required at work, gym clothes, unless your job specifically requires them. 5. Self-education and upskilling costs. If the course or training improves your current job skills, you can claim. Claimable items: course fees, textbooks, stationery, computer software, internet or phone relating to the course, travel to and from the campus or training venue, depreciation of technology used for study. Not claimable: courses that help you switch careers, school fees for children, courses unrelated to your employment. 6. Investment-related deductions. If you earn money from investments, many related costs are deductible. Common examples: interest on loans used to purchase investment property or shares, management fees for investment accounts, financial advisor fees when directly connected to earning investment income, subscriptions to investment journals, depreciation of computers used to manage investments. This is particularly valuable for Australians with rental properties or share portfolios. Number 7. Donations to approved charities. You can claim donations of $2 or more to organizations recognized as deductible gift recipients, DGRs. Important rules: you must receive no material benefit in return, e.g. raffle tickets do not qualify. You need a receipt or record. Donations can be made in cash or online. Gifts to political parties may also be deductible under specific conditions. 8. Cost of managing your tax affairs. This is one deduction many Australians forget. You can claim fees you pay to a registered tax agent or accountant, fees for tax advice, expenses incurred in managing your tax matters, certain interest charges from the ATO only for periods before 1 July 2025. This effectively reduces the cost of professional help. 9. Depreciation on work or investment assets. Any asset you use to generate income can be depreciated. Assets commonly depreciated: computers, phones, tablets, tools, office chairs or desks, printers, work equipment costing over the instant write-off limit. Depreciation spreads the tax deduction over several years based on the asset's effective life. Number 10. Other work-related expenses. This category includes many smaller but valuable deductions. You may claim union fees, professional association fees, subscriptions to industry journals, work-related phone and internet expenses, cleaning expenses for a home office, PPE, masks, gloves, sanitizer if required for your job, first aid kits for work. These add up significantly over the year. Key ATO rules you must remember. 1. You must have spent the money yourself. If your employer reimbursed you, you cannot claim it. 2. The cost must relate directly to earning income. Personal or private portions must be removed. 3. You must have a record. Receipts, invoices, logbooks, bank statements, or diary entries may be required. 4. You must apportion mixed-use items. For example, if your phone is 60% work use, you claim only 60%. If your internet is 40% work use, you claim only 40%. 5. Claims must be reasonable. ATO audits focus heavily on car expenses, work from home hours, large deductions without evidence,